Stocks have gotten off to a horrendous start in September. Although the exact reason behind this rocky start to the month isn't altogether clear, it can probably be attributed to a couple of headwinds, such as the uncertainty created by the upcoming presidential election, the lack of movement in Congress on another stimulus bill, the historical weakness of stocks in September in general, along with a healthy dose of profit taking. This market-wide pullback isn't all bad news, however. For investors with a long-term outlook, sizable dips in the market can create tremendous buying opportunities. In this video, I'll discuss 3 different growth stocks that you can purchase in September 2020, which are still undervalued and present great opportunities for gaining large profits and building up massive portfolio capital gains along the way. Get ready! You are now entering the Academy. For the first stock, we have Berkshire Hathaway, ticker symbol brk.b. Warren Buffett's diversified holding company Berkshire Hathaway isn't designed to produce market-beating returns during a raging bull market. Rather, the Oracle of Omaha has chosen world-class equities such as Coca-Cola and Johnson & Johnson that tend to not lose money in bad times. As such, it's not entirely surprising that Berkshire's shares have underperformed the broader markets for the past 5 straight years. A period characterized by one of the strongest bull markets in history, but it might be the right time to circle back to this defensive-oriented equity. This year's early economic recession could eventually evolve into a full-on depression if the market situation doesn't stabilize. Companies are still laying off employees at a record pace, the pandemic is showing no signs of cooling off in countries like Brazil and the US, and Congress refuses to come together to work out a second relief package. All of these headwinds might result in a prolonged bear market. If true, Berkshire, with its conservative investing philosophy as its focal point, should provide to be a safe haven for investors. So if you're on the hunt for a way to remain invested in stocks but want a low-risk vehicle to do so, Berkshire is arguably your best bet. The second stock is Apple, ticker symbol APPL. On just one day in early September, Apple lost $180 billion in market capitalization. That's the largest single-day loss for a U.S. company listed on the stock market exchange. Shareholders have apparently grown worried about the tech giant's historically high valuation following its red-hot growth streak this year. Even after losing almost 8% of its value just recently, Apple's shares were still trading at almost 32 times forward-looking earnings. That's a hefty multiple under any circumstance, especially given this economic recession that we're in. Why should Apple stock be on your shopping list this month? Apple's seemingly rich valuation isn't exactly what it appears to be at first glance. The truth is that Apple's suite of products and services such as the iPhone, the iPad, and Apple Music have morphed into consumer staples over the last decade. What this means is that demand for the tech giant's biggest revenue generators is unlikely to wane, even in the current economic climate. In fact, Wall Street expects Apple to grow sales by a healthy 12.6% in 2021. The big picture is that Apple's premium valuation is arguably well-deserved. The company has a solid base of extremely loyal customers, and it has proven to be one of the most innovative entities in the entire tech space for a long time. A great time for picking up some shares for those savvy investors. The final stock is none other than Tesla, ticker symbol TSLA. Tesla's meteoric rise this year, fueled by its improving fundamentals and recent stock split, have ignited speculation that it might be in a huge bubble. Tesla, after all, is currently trading at a mind-boggling 131 times forward-looking earnings and around 9 times its 2021 sales forecast. To put these numbers into perspective, the average price-to-earnings ratio for the automobile manufacturing industry has hovered around 8 for the past 14 years. The industry's mean price-to-sales ratio for the current year, by contrast, presently stands at a far more modest figure of 3. Tesla's premium valuation, therefore, definitely stands out as an outlier compared to its peers. Nevertheless, Tesla isn't a bubble stock. While the claims of Tesla's frothiness stand true from a classic fundamental analysis, this is a company that defies convention and should be treated as such by investors. The bottom line is that Tesla's renewable energy platform has already revolutionized the car manufacturing industry. What's more, it will almost certainly expand into several other unrelated industries over the next decade. So it's probably a bad idea to value Tesla merely on its near-term outlook. Why buy this red-hot stock this month? On September 22nd, Tesla is slated to hold its Battery Day event, where the company is expected to discuss the state of its million-mile battery. This single innovation has the potential to radically change the pricing point for electric vehicles and perhaps pave the way for a revolution in electric aircraft as well. Long story short, Tesla's stock should get a nice boost from its upcoming investor event later this month. By continuing to employ the simple strategies learned in the 10X Academy channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk growth income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, one can create a capital gains income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 growth stocks that are still underappreciated as of September 2020 and can be added to any savvy investor's portfolio, providing great capital gains opportunities. If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a growth income portfolio using the methods mentioned previously. And if you register now and make your first deposit, you'll receive 2 free stocks worth up to $1,600. So make sure you take advantage of this offer now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.